If you're a first-time home buyer and you think that you have to put 20% down, then I've got great news for you. That is not true. Hi, my name is Scott Hastings. I'm a loan officer based in Davidson, North Carolina, which is right outside Charlotte, North Carolina. And I help people in North Carolina, South Carolina, Florida, and Virginia get a mortgage on their home. So it's really one of those things, when you are in a business and you understand the business, it's hard for you to step outside and see it from somebody else's perspective. So it is almost hard for me to believe that there are still people out there. And my friend and I were talking about a study earlier today that over 50% of first-time homebuyers still think that they need 20% down to buy a house. Well, that hasn't been true in a long time. And in fact, if you're a first-time home buyer, you can put as little as 3% down on a house. There's room in other videos to talk about strategies where you don't have to put any money down, but for our purposes, we're going to talk about the conventional loan. It's called a home ready loan if you're dealing with Fannie Mae, and a home possible loan if you're dealing with Freddie Mac. Those are both conventional mortgage loans. And the first thing to know is, are you a first-time home buyer? So I had a text this afternoon from a borrower filling out a mortgage application. She asked if she was a first-time home buyer because they bought a home in 2016. She was on that mortgage. They refinanced in 2021, and she is not on that mortgage. Well, a first-time homebuyer is anybody who has not had an ownership in a home in the last 3 years. And an ownership means that your name is on the title. So it doesn't have to be on the mortgage, but that means you have been an owner on the home. And when we're doing down payment assistance programs, like for the state of North Carolina, for example, the way you prove that you're not have not been a home buyer in the last 3 years is by sending in 3 years of tax returns. So if you haven't claimed any mortgage interest deduction, that's a really good sign that you haven't been a homeowner in the last 3 years. Well, the benefits really, if you have very good credit, are really not much more beyond that. The ability to put 3% down as a first-time homebuyer. If you do fit into a certain income category, which is determined by the county and the state that you are in, then there could be some additional benefits, such as a reduced mortgage insurance premium, potentially, lower interest rate on your mortgage. But I find that that's really only true if your credit is not excellent. And something that I see often misquoted or mistalked about on YouTube and across the internet are these people that say, oh, you can get a conventional loan with 3% down and a 620 credit score. Just because it says that in the guidelines doesn't mean that it's true. In fact, I would doubt seriously that it'd be possible to even get qualified for that if you had under a 660 credit score, most likely. The reason is that all mortgages have to be run through an automated underwriting engine. And what that does is it reads the credit, it reads the income, and it reads basically all the input, all the data that's input, and spits out, you're approved, basically, or you're not approved. And I find that you have to have decent credit to do a 3% down payment mortgage. But if for some reason you don't, then you can get an FHA loan and put 3.5% down. And again, that's a subject for another video. So I'm going to put a link in the comments below where you can go and plug in an address and see whether you would fall under that income limit to be in the home ready or, basically home possible program. Again, even if you're not in that income category, you can always put 3% down as a first-time home buyer. If you're in that income category, it just means that you might have a little bit of benefit on the mortgage insurance and possibly on the interest rate. So if you have any questions, like always, again, my name is Scott Hastings. Put them in the comments below. You can find me on my website, mortgagesbyscott.com. And please, if you like this video, it would help me out a ton if you would hit like and subscribe. All right, thanks.